Hey guys, GoldStreams here. So the 27th of February, Thursday, last trading day of the month for me. So I don't like trading Fridays anyway, and I don't like trading the last Friday of the month, especially if it's the last day of the month as well. But yeah, that's pretty much it. I just want to say we've had a fantastic month, very disciplined, very consistent, extremely impatient with our drawdown, pretty patient with our winners. I think we could have been more patient at times, and there's always sort of places, well, things to improve on and things to learn. I think that's something that I need to get a little bit more comfortable with, is holding on to winners for a little bit longer. I stick to my rules very strictly, and I do that for the upside and for the downside. But yeah, I think letting our winners run is definitely a lesson for this month, for myself anyway. So as you can see, today I came in to the markets as I usually do 2 hours before London opens, so pre-London, and gold had already dropped about 305 pips down. Very clean. And I was going to be honest with you guys, I was expecting consolidation for London session. So generally when gold trends heavily during Asian session, then London or pre-London and maybe London Open as well, you get consolidation. So, that's what I was expecting. That's why I marked the support there a little bit prematurely. I marked it on the 15-minute time frame, and it reflected on the 30-minute time frame as well, because the 15-minute candle was coming to a close at this point. Now, I was looking at the 15-minute market structure. I could see that we had a very strong bullish candle close. The 30-minute candle was closing quite strong as well, but I didn't want to take a trade off the 15-minute time frame, and especially not a buy, right? And then this massive sort of downside movement. But for structure to be broken, and I'll be honest with you guys, today wasn't the cleanest trade. Well, this wasn't the cleanest trade, because normally when you're trending down like this, to take buys, you want to wait for resistance to be formed, and then once resistance is formed, you want to wait for that resistance to be broken, so a candle to close above the resistance for confirmation of buys. Now, there is a risk with missing a trade if you're doing that, but it's always better to miss a trade than to lose a trade. But anyway, I didn't follow that rule to the T. And I think I didn't follow that rule to the T today because I was sort of looking at the charts. I've had a very good month, and overconfidence is definitely a thing. So what I did here, as this candle was coming to a close, and I was being patient with the candle closing, I wanted to see the next candle wick down. Once the next candle wicked down and started breaking its high, I would want to enter a buy. But what this candle did is it came up, and I opened magic keys up here. It came up and it started just literally trying to break the high instantly. I was being patient though. I wanted to see the high be broken, like fully be broken. We had a lot of clean rain to the side, so I was like, you know what, this could be a nice wick to the upside for the 4 hour time frame, which means the 30-minute time frame is going to obviously continue up, and the range was very strong to the upside. So I think we had like 300 pips. It fell completely. If I'm not mistaken, we had about 120 pips to the next resistance for it to move. So as you can see, I entered the trade. It went directly into profits. Now, the wick that's on the left-hand side, so that bearish candle on the left-hand side, that also reflects as the 1 hour high. Now, if you want to see market structure be broken like this, and if you want to see, sort of the trend reverse, then it's very important to see highs being broken on the higher time frame. So the 1 hour and the 30-minute. That's what made me enter this trade. The fact that the previous 30-minute candle closed very strong bullish candle with little to no wick to the downside. It closed, very strong bullish. So what I was doing here, I was adjusting my sort of stop loss to below this candle. If this candle breaks so low, the trade's automatically invalid. It's broken the high. It's got no business to do that. And as I'm adjusting it, I thought, let me add another position, because I only entered this position with 1% risk, because it's a risky position, right? So the candle was tested its low. It didn't break it. Um, so I thought I'll add another position. I have my stop loss now. I'm in this trade with 2% risk. But once I hit a 1-to-1 on the second position added, once I hit a 1-to-1 on the second position added around 13, 14 pips, I didn't want to sort of, because it's not the best setup. Like I said, you want to wait for resistance to be formed, resistance to be broken, and then you enter the trade, especially for buys. So I closed the first position at a 1-to-1. I put the second position in break even. It was running at around 14 pips, as you can see. So the first position at 1-to-1 was around 14, 15 pips, and I let it run. So I made 1% on the account. I let the second position run, and it's going to do one or two things. It's either going to come down and hit my stop loss, break even, completely fine with that, or it's going to go up to the initial target. But I knew if it couldn't break that wick to the left-hand side, so if it couldn't break the 1-hour high, then this trade is sort of invalid, and it's very, very low chance that it's going to keep going up. And that's exactly what happened. It couldn't break the 1-hour high. Market came back down and sales continued. But now, with sales, it's very clear market structure. Sales are a lot easier, and I always advise you always look for the easiest trade, right? Sales are a lot easier. You want to follow the trend, especially if you're a new trader. If you're trading against the trend, be very, very careful. Use lower risk. Understand what you're doing. Don't get emotional, okay? Trading with a trend is much easier. It's much simpler. So, as this candle now has rejected the top side, and it's coming back down, and it's got maybe 5-6 minutes, if I'm not mistaken, to close on there. It comes down and it starts breaking its own low, right? Now, this means the 15-minute candles come down and broken the previous 15-minute candle low, right? This is where I enter my position, right? On the 15-minute time frame, using 15-minute candle as confirmation. My stop loss is on top of the range right here. So it's a little, again, 1-to-1, but this 1-to-1 now is with 1% risk. No, sorry, 1.5% risk. Okay, so I'm now just anticipating market to move down and obviously keep following the trend. My stop loss is sort of set up there, bit above the previous candle's high. I'm not expecting this candle to turn bullish and go up there. If it retraces and starts breaking the previous candle high, I'm closing 50%. The only issue I had with this particular trade, as you can see there, the screen just goes completely dark. It goes black. And I don't know sort of what happened there, but you guys can look at the structure. On the 15-minute time frame, the candle came down, and the next 15-minute candle actually went straight to take profit, so around 24 pips. But that's me for the month. Feel free, obviously, guys, to subscribe, like, comment, share, and let me know if you have any questions. Thank you.